Hello, everyone. Welcome back to SureFire Live. And we are on YouTube again this week because I'm in Facebook jail for something really stupid 2 years ago. I should show everybody what it is because it's so dumb. But welcome. We just finished up, or some of our people have finished up the Chimney Expo. And we had a lot of people come by our booth, and it was great to meet a lot of you. I wasn't there, but Brianna and Jake were there, and they all said it was really overwhelmingly great experience, and people were very nice, and they were very they had a lot of great things to say about the program and the SureFire platform in itself. So thank you for that. This week, I'm going to have a friend of mine on, Cam Arnold. I met him a few years ago at a networking event, and he came up and told me he's in insurance. And at the time, I felt like I had an agent that I had already, had a good relationship with. I'm like, oh, nice to meet you, but I didn't really have a need for other insurance because I thought my insurance guy was taking care of me. Well, come to find out, Cam said, well, let me just run your numbers. And Cam did, and found some huge gaps and huge issues in my coverage. And it was amazing when somebody else took a look at what I had and also what he found and did for me. Well, at that point, he started doing it for other chimney companies, and he's been a great asset to our industry. So with that, let me bring Cam on. Hey, Cam.
What's going on?
How are you?
Doing good. Just wrapping up the workday.
So for those of you that don't know this, Cam is from Georgia. He's got the
bad accent.
Yeah. But I'll tell you, it's been great to have you in this industry. And I know you didn't know the chimney industry before you met me. What's it been like getting to know these guys?
It's actually been very refreshing. Mark probably didn't tell you this, but when I started, I looked like I was fresh out of high school. And moving to Nashville, dealing with different professionals, and there's a lot of healthcare here. So when I got into the chimney industry, being from South Georgia, it was very refreshing because I dealt with people that were from similar backgrounds as mine. Some people had similar accents, blue collar people, and they're just very laid back, very accepting. Non-judging. So it's been, like I said, it's very refreshing, and it helped me kind of cut my teeth on the insurance industry. And if I could go back and choose a different industry, I wouldn't, because it gave me confidence and the background I needed to be where I am today.
Well, you've been super helpful for a lot of people, and I know you can't always help everyone, but you have a ton of information of really what to look for the people who are listening and that will listen back to this. So I know you put a presentation together of what you kind of a lot of the new stuff. You said it's a little bit about chimneys, but really it's about insurance in general and some of the things that everybody needs to look out for. So I know we just have a few visitors right now, and YouTube is not as interactive as our Facebook page has been, but there'll be a lot of listens back to this as well. So if you have questions, please put them in the comments, and we'll ask Cam as we go. So Cam, let me go ahead, and do you have your presentation ready on your screen?
Yes.
I will. Here we go. It's still showing in it. There we go. All right, so we can see your screen now, just so you know.
Hey, I made it customized to SureFire. SureFire nice. Changes in the insurance market.
Thank you.
So if you're ready, I'm going to go ahead and just jump into the first slide.
Yeah, go ahead.
So the first one we're going to talk about is property insurance. And not everybody owns their building. A lot of people lease or work out of their homes. One thing I will say that you need to look into if you work out of your home is you probably just have a homeowner's insurance policy. I would ask your agent to make sure that any home-based business is covered. There's a lot of people who run maybe a marketing or a embroidery, or just like they don't have customers come to their house. They just run a business out of their home. But if there is any kind of loss, it would be excluded if that is excluded in your policy. So that's the first thing I would look for if you run a home-based business. Second thing to keep in mind is we're really seeing it in just about every market now. Really tough in large markets such as Nashville. If you live in a large city, any kind of place there's a metropolitan area, we all know people are moving there. Property values are going up. Building materials are going up. Construction costs as a whole are going up. So we have a tough time when we go to insure, whether it's a commercial building or a home in general, insuring it to value. So when we go to insure your property, we run it through, just every insurance carrier has a program called a cost estimator. So they're going to run your square footage, and then they're going to run the average cost of material. They're not going to take into account the land or your labor cost. It's just going to be a complete average. So, for example, here in Nashville, there's homes that are going for double the asking cost, and it's a feeding frenzy. You put it on the market, there could be 15 to 20 to sometimes 40 offers on the table. And when that happens, you could have let's call it a $500,000 home go for $1 million. And when you do that, what happens? You got to get a mortgage. And when you get a mortgage, you got to get an appraiser to come out and say, well, this property is worth $1 million, so you can get a mortgage from the bank. And then when they say it's worth $1 million, then you got to get it insured for the $1 million, because the bank wants you to insure the property for what they're lending you for. The problem is they're not taking into account the building materials and the land. They're looking at it and wondering why this is happening. They know why it's happening, and there's really nothing they've done to offset that yet as far as the cost and the rate, because insuring it for that is, like I said, it's very tough, and it's becoming more expensive. We just got off the phone with a company called State Auto today, and Mark, I think when I started out, the inflation guard on property policies was around 2.5% to 3%. They're talking about raising it to 8% now, because property values, building materials, cost to build, all of that is just going haywire, and they have to do something to keep up for it. Otherwise, if there is a loss, and we never know when a loss is going to happen, you're going to be underinsured. And if you look in your policy, you'll also see a little thing called co-insurance. And if you don't have these to guard that, or if you don't have an insurance agent that's on top of it, making sure that your values are current, you could face that co-insurance penalty and be stuck paying some of your loss out of pocket.
Well, just on that point, how often should people you really need your insurance looked at every year? And then do they need to do this property appraisal to make sure you have coverage with whatever inflation is hitting you? Or how should that work?
Well, there's a couple of things that go into it. It really depends on how liquid you are. And if you're liquid and you're willing to self-insure some, great. That's no problem. It also depends on what you're willing to insure the building for if you own the building outright. If there's not a lien holder or anybody holding the note, then you don't even have to carry insurance. It really, when they say insurance tailored to you, whoever it is, whether it's myself or another insurance broker, that's what they mean. Like, we can tailor this to you. You can take on as much risk as you'd like or as little as you'd like, but it's imperative to be transparent with your agent and not do it on okay, I'm going to save $100 a month here. Because if you try to, I take it back to Hurricane Michael in Mexico Beach. Lots of friends who had homes in Mexico Beach that they owned and they didn't have to carry insurance, and they would kind of play roulette, carry insurance for 5 years, then not. Well, they said, yeah, I'd be willing to rebuild. Well, now they're rebuilding and they're stuck paying $1 million out of pocket to rebuild their home, and they had zero insurance. So it's important to be honest, not only with yourself, but with your broker on that. And there's not a one size fits all product. I mean, there can be if you don't care, but if you really want to make sure you're protected and you get value out of your insurance, that's the way to do it.
Good information. Thank you.
And that takes it on to the next one, natural disasters. Like you have no idea when something's going to hit. We see tornadoes. I mean, it may not even be tornadoes. We actually got hit pretty bad last year, Mark, with the tornado. I think it was on March the 2nd or 3rd.
Yep.
And then shortly after that, we had those straight line winds that came through.
We had the tornado, then the COVID shutdown, and then straight line winds, like all within a month.
Exactly. And it was, if you didn't get hit by the tornado, you got hit by the straight line winds. And again, it was one of those things that you never know when that's going to happen. You could always say, I'll revisit this tomorrow. And I understand everybody's busy, so it's tough to set aside the time. Insurance isn't fun to talk about. And sometimes there's a lot more important revenue driving matters at hand. But when you have one of these natural disasters or something that happens and you're not insured properly, you want to talk about a revenue driving matter. Well,
yeah,
it's one. It can take a huge hit to your bottom line.
So let me, before you go to the next thing, Chad Murray says the problem with many agents is they don't know the service business game to insure us correctly. And he is so right. I remember when I first started trying to find somebody at some of the big names that you've heard of, and they try to plug us in just by cleaning services or janitorial or some, they don't really have a category for us and they don't know some of the things. And maybe I'm jumping ahead. Are you going to cover this later in your thing, or is this a good time to talk about what agents know?
This is a good time because it's I didn't necessarily plan for general liability insurance, but since you asked for it, there is a spot for you. It's 91481.
91481 is our code.
That's your code, and then 97447 is masonry. 91481 is specifically chimney cleaning service, and awesome. 97447 is masonry. For those of you that are doing installation of whether it be gas appliances, wood burning appliances, some people, like I know you have a whole sheet metal department. So at that point, that's a little more customizable, things that you do differently from other service businesses. But as far as, and those differ by state, the wood burning and gas burning appliances, those are different by state. So it's kind of mandated by what the underwriter wants to put you under. But as a whole, you are 91481, Chimney Service Business.
So Chad asked the questions, what about chimney repairs? Would that fall under masonry, or if you're doing a liner, or what would that fall under?
So there's my chimney cleaning questionnaire that I have from Selective as the insurance carrier. It has the service breakdown. So there's a lot of things that goes to animal removal, this, that, the other. But in the actual chimney service, it includes inspections, but it doesn't include you approving someone to burn a fire. It just includes if you damage someone's home during inspection. It includes tuck pointing, crowns, if you have to do any parging of a smoke chamber, if you have to install liners. And this is all general liability, not work comp. But in the general liability, it's all encompassing there in the 91481. Now, if you start to get into something other than tuck pointing, like if you're rebuilding a chimney from the roof up, that's going to be your masonry. If you're just replacing a few bricks, you can, like, if you have some bricks that are spalled on the surface of a chimney and you're just cutting 5, 6, 10 of them out, you can keep that in the 91481 class code and be covered.
Right. Good information. So sorry, we'll let you continue. So thanks
No.
for those questions, guys. Great questions.
So again, the property insurance, you're going to see a rise in your rates due to, like I said, the rise of building materials, land, the competitiveness of the real estate market as a whole. Natural disasters, they're not just regional, they're everywhere, whether it's your wildfires, whether it's your tornadoes, whether it's your thunderstorms, winds, snowstorms. We had a big ice damming problem here several years ago. So those two things are going to play a part. And the last thing you're going to see is age of buildings. We're in 2021 now, and I have a lot of property customers that they're just property managers and they own lots of property. They'll buy properties because people, like I said, it's competitive. It's a great time to sell. And when they buy those buildings and we throw them on the policy, people will go out and inspect the building. Now, why they may not have had issues with some of their old buildings, the question that I get a lot is, well, Cam, I have a building that was built in 1950. Nobody's ever come out there and looked and asked me to inspect it ever. Well, the reason is you've had that building on there as long as we've had your policy. Some of these customers we've had since 1986. There's never been a loss. There's never really been a reason for them to go out there. Now, as technology and these losses and the actuarial side of things start to ramp up and they have more tools of their exposure, they're going to send people out to take pictures, to inspect your property, and they may require you to make some adjustments. And some of them are as little as you need some downspouts to keep the water from hitting on the siding and causing erosion, or not erosion, but any kind of dilapidation of the building. You need to put thresholds on the outside. You need exit signs. Small things like that we have always seen. They're becoming more prevalent because, again, we're also in a sue happy world, and they're trying to cover their side of things and make sure that the people that they're insuring will take care of their side of things for them to help mitigate the risk.
Right.
So those are a couple of things on the property insurance side that you can see. Like I said, you'll no doubt see a rise in premium. And
is there a kind of percentage we're going to be looking at? It's
regional.
What's that?
It's regional. Some regions take it differently based on how that region is performing loss-wise, like how profitable it is or how not profitable. But you will see a rise. And a lot of people say, I've been paying insurance for 20 years and it always goes up a little every single year. That's natural. That is just part of purchasing insurance and owning a business. People tell me that, and I say, well, how many times have you not raised your prices annually to keep up with the cost of living? If you haven't, you're not running your business properly.
That's right. And let me just talk about that for a second. Everybody gets hit with insurance rates. Your insurance rates are going to be different than other people in different areas. It's just the cost of doing business. And you must know your numbers enough to then add it to your service cost. So again, you get a $2,000 raise or $2,000 cost increase on your insurance, just for example. Average chimney company works 200 days a year. That's going to be $10 a day that you need to make more for your insurance. So you need to raise, if you do 4 sweeps a day, you need to raise your prices $3 a sweep or whatever, $5 a sweep to cover your insurance cost raise. It's really not that hard when you get these price increases or material cost increases to then split it out over either how many jobs you do in a year, or there's different ways to do it. But you must know your numbers, and you can't take a hit on the bottom line. You can't take a tax increase, an insurance increase, a labor increase. When you give people raises, when you do these things, it has to be reflective in your costs or in your price when you charge people, what you charge them. That's why when some people ask how much other companies charge to do things, That's one of the quickest ways to ruin your business is to run your numbers off somebody else's numbers, especially in other parts of the country. There's no way you can know. You can't run your business off somebody else's prices. And Cam is bringing up a great point as to it's different all over the place. Real quickly, question from Chad. Chad says rental property insurance differs from ownership property coverage. I think that's a question. So yes, those two things are different, correct?
Yes. So your rental property insurance, a lot of time there's two types. There's a lesser's risk, which would be what you would have to rent a property. So you own the property, and you would insure the property for the actual structure. You're going to insure the bones, everything about it. Your general liability code for that is going to be lesser's risk. I don't know the numbers off the top of my head, like the class code, but that's going to be what it is. Now, you also have short-term rentals. Those are your property rate is going to be very similar to that of a personal property you own, but the general liability for a short-term rental is going to be much higher than what you have for a lesser's risk, because your risk variant is going to differ. You're not going to have somebody who that's their home. It's a short-term home, which a lot of time comes on vacations. And when you come on vacations, everybody knows you let your hair down, you get a little careless, and that's why they charge a little more.
And you don't care because it's somebody else's property.
You have one. I insure it, and it was the first. I don't know if it's your first time or if it was a few times into it. You said people took pillows. I mean, it was just a disaster.
The very first time somebody came and did our first Airbnb, they stole pillows, coffee cups, broke a mirror, or broke a lamp. They smoked in the bathroom, like completely terrible. I'm like, what did we just get into? Fortunately, we haven't had that problem since or anything near like that. But you're right about people. So you're basically saying if you do short-term leases, short-term rentals, your price is going to be higher than if you've got somebody literally or long-term rentals, correct?
Correct. You're probably going to be paying close to double.
Right. Perfect.
All right. So the next we got is auto insurance, and this really does. I mean, it's all over the board. You have several locations, and we insure all of them. Your auto rates here in Nashville are around $1,500 to $1,800. Your auto rates in South Carolina are around $4,000. No difference in the autos.
Wow.
The autos in South Carolina, they've got hit with a lot of flooding in that region, so they're taking more rate there. So that differs a lot. But another thing just that you can count on is you have those natural disasters and things that happen in driving habits in different regions that cause your rates to go up. But one thing that is going to go up no matter what across states, or no matter what state you're in, is the fact that there's more cameras and more sensors on your vehicles. It's not like you could back into something, go to a salvage yard, grab a bumper off a F-150 or Chevy, and then throw it back on your truck yourself. You have to replace all of those sensors, all of those cameras. And that being said, there's also more autonomy in these vehicles, like the Teslas that are driving themselves. There's the self-parallel parking. There's the, when you're on the interstate and you get too close to somebody, auto braking. Those do play a part in how they're calculating these auto rates, because automobiles are becoming safer, but they're also becoming more expensive, if that makes sense.
Do you think these things help your insurance rate or make them go up?
Well, the cameras and the sensors, they make your insurance rates go up because your automobile's more expensive.
Right.
But I think as the autonomous cars become more prevalent and you take away human error, we will see a decrease over time. and again, it's the artificial intelligence. I forget the name of the movie, but it's one of those things. Oh man, I would really love my insurance rates to go down. Well, at that point, when we have those autonomous cars to get the insurance rates down, there's a lot of people a lot smarter than us doing this that are making this happen. You're going to look back at 10 years saying, well, my brother got put out of business because he was a truck driver, and now they don't need truck drivers.
That's right. I think chimney sweeps are pretty safe for a while. But tell me this. What about some of these programs where they can plug something into your car and check your driving abilities and check your this and that to adjust your rates? Is that a good thing? Is that a bad thing? Is it a gimmick?
No, it's a good thing, but it depends. It depends on, again, you got to be honest with yourself. How serious are you about running a good business? I have, I think I told you the story. I have a client here in Nashville, and I have this place that I frequent every single Monday. And I was in there, and I go in there, I get a beer, a burger, hang out, just shoot the breeze with the crowd in there. And they're all probably 60 years old or older. And there's a guy in there that I had no idea, but he was a client of mine. And he was driving a company vehicle. And Mark, I tell you, he would get drunk as a student. And he would take his insurance serious, but I wanted to be like, I never said anything to him. He finally connected the dots. But it's not my business to say anything to you. But I was like, he's honest with me about wanting to take his insurance seriously, but he's not taking it serious.
Right.
So going into the tracking, that's the kind of thing, like, yes, it can really help you, especially if you're letting your techs take their your trucks or vans home at night.
Right.
You can track them to see, hey, did you go home or did you go to the bar? Did you go make that stop, that last estimate at the customer's house, or did you stop by the liquor store? And it can really save you when, again, I had a customer who went to a bar instead of went to their last appointment, and he drifted across the line, head-on collision, only because they had this tracking. And tracking has come light years. In only the past 2 to 3 years, they're making it so much better, just where you could plug it into your cigarette lighter and its car charger. But only because they saw where his car was parked for, I guess, if it's a 5-minute or more delay, they saw that he was at a bar and then he got into that accident. So that saved them from their insurance having to pay out over $1 million.
Wow. Really?
Yeah.
So on that tracking, is that something that as owners that our GPS systems can help us with? Is that something that our insurance agent should give us something to plug in? Like, what do we do with that information?
There's a give me just a second. I'm going to look at my email here. This lady emailed me about it today, a program that she uses. They use Samsara.
Sansara?
Sam, like S-A-M, Sarah.
S-A-R-A or S-A-R-H?
S-A-R-A.
Samsara. And what does that do?
So that is what they use. Some insurance carriers will provide you with tracking. I know Selective, they have a tool. State Auto has a tool. Several of them have tools that if you elect to use, they'll give you a 15% credit on your auto insurance.
Really?
Some people don't want to use it because, like I said, they're honest with themselves and they know that there's some things going on that could get them canceled or cause trouble, and they're not willing to do that. And that's okay. Again, it's all about being honest with yourself.
Right.
But yeah, there's several companies that provide it. There's some companies who don't provide it, but they have partnerships with companies that do, and you can get a discount on the membership for signing up. And there's some companies that if you show them that you do have some kind of tracking system, they'll give you a discount, but they don't provide a discount to that system or provide you the system.
Well, let's talk about levels of coverage then on your auto insurance and my vans. I know that there's, I always have choices to make when, you come and say, hey, we need to do this or do that. What do you want to do on these vehicles? And now we've got, more liability, nicer vehicles, bigger potential for lawsuits, that type of thing. What would be some just good advice for the listeners about how they should select the right amount of auto insurance or insurance for their trucks?
If you have any type of signage on your vehicle, and most of the vehicles are wrapped, you're doing yourself a disservice to carry anything less than $1 million with $1 million umbrella.
$1 million with $1 million umbrella is what you need if you got your name all over the side of your truck.
So that's a $2 million worth of coverage. A lot of people I see, again, the home-based business, one-man shows. They're running their vehicle under their personal name, and they have their company name on the outside. Well, when you have it personally, again, it differs by state. Most of the times, the highest amount of insurance you can get on personal auto is $500,000 or $350,000 in some states. Some people have state minimums. So what does that mean? Well, not only are you going to get sued, but you're going to get sued for your business and your personal.
Right.
And a lot of people don't think that can happen. Well, they're misinformed. Yes, that can happen. I don't care what any lawyer tells you. They can come at you for anything that you have if you're operating it that way. If you're operating your business and your company vehicle has your personal name on it, there's nothing you can do about that. And yeah, they may not, you can say they can't get anything from me because my company doesn't have anything. Well, they can come after everything that you have, future earnings, all that kind of good stuff or bad stuff.
You told me that one time that, hey, because some people were saying, hey, I don't want to have insurance and because they won't come after me. And you're like, well, no, they can still come after you. And even if you don't have the money now, they can come after future earnings and, basically garnish your future earnings against a lawsuit if you aren't covered properly.
Yes, and that's it. A lot of times people and lawyers will know, especially the ambulance chasing lawyers, they know if they have a case and they have a lot more money than any kind of lawyer that you can provide, especially if you have discount insurance, and they're going to go after everything they can.
Yeah, that's a fact. All right, so we got it, auto insurance. What's your next topic?
Next is cyber liability, and I think this is where 99.9% of small businesses are misinformed and just very exposed.
So let me just say something here. I know you came to me a couple years ago with this, and in our chimney business, we don't feel like we really need it. And I know you're going to talk about why, but my gosh, if you watch the news at all, cyber is becoming just the biggest problem that a lot of businesses are starting to face. And I had a ransomware thing. Luckily, it was a fake ransomware thing, but locked me down. And I just had a little bit of my IT company had to come say, hey, by the way, this wasn't real. But cyber liability, as you're going to talk about, we all, if we're connected to the internet and we run a business, we're going to have to worry about this.
Absolutely. And for example, I got a buddy, he runs it's about a $40+ million manufacturing firm down in Georgia. And after the Colonial Pipeline got hacked, he emailed me or texted me and said, hey, can we get some ransomware coverage? I said, absolutely. I was telling him But the underwriter, I was like, they don't have a website. They said, you don't need a website. If you have an email, they can get in there through your email. And that's so part of the reason, and again, I know a lot of people don't have cyber liability, but some people do have it built into their policy. And if you do, it's not enough coverage. It's probably $25,000 to $50,000 worth of coverage. And you're going to get sticker shock when you go to look at it. They base it on your revenues and also on what kind of controls you have in place for your website, your dual authenticators for your logins, and your checks and balances on your emails and how you make payments. So the loss frequency and severity from the past since 2019 are driving the rates through the roof. If you have insurance now, you're going to see a 15 to 25% increase, no matter what. This isn't regional. This is everywhere. And then on some of the higher hazards, there's a 30 to 45% increase that you're going to be looking at. You wonder how they figure this out. So when you go through the underwriting process, your website, your email, your payment portals, your contact, like all that kind of stuff, they're going to go in there and see how easy it is to get in the back end. And then they're going to come in and make suggestions for you. So they'll either say, it looks good, we're going to give you this coverage for this rate, or they're going to say, we're going to give you this rate, but we also need you to make a few changes on the back end. And it's not, hey, we need you to do this to insure you. It's to protect you. So 49% of the cyber attacks last year were on small businesses, affected small businesses.
Wow.
So that's a pretty big number. A few things you may hear. One's ransomware. What that's going to do is it's going to lock up your files or your devices until a payment is made. They'll request payments. You may say, I don't have a lot of money. Well, that's the reason they come after small businesses, because, asking for $2,500 or $1,000 may not seem like much, and you may just pay it. Well, think about how many small businesses there are in the U.S. and how many times you could do that a day.
Well, let me just say something about that. When they did that to me, when I got that lock screen, my IT guy said, well, by the time they tell you they're getting in, they've already got your stuff. It's already too late. You're already locked in. You can't do anything. You either lose it. I think my ransom, they wanted $15,000 for mine. And, so I didn't have to pay it, and they didn't have my stuff. It was a fake thing. But my IT company had to do that. But I think you're right. They go for these quick, small things, and if not, you're going to lose your thing. And I know we can talk about how to prevent that. But you explain to me how, I guess, the insurance part of this works.
So if you don't have insurance, you're screwed. You got to pay it, or you go into the data breaches, confidential data stolen. Well, there's a Safe Harbor Act or something like that requires, if you have 48 or 49 plus, or maybe it's 250 records. It's been a while since I looked at it, but one of the numbers, once you hit that threshold, if they've been compromised, then it's federally mandated that you have to let them know. And it costs about $49 per record to send out notice that you've been hacked, and also to go back and do all the back end forensics work to make it right for you and your customers, not to mention what you could be sued for damages. Wire fraud is the tricking of an employee. Hey, we have, and I'm just going to say this because it's a buddy and it's the one I'm thinking of, but New England Chimney Supply sent you something, but it's New England Chimney, but they spell it the N-E-E instead of N-E-Y supply. You pay it. And you're like, wait a minute, I've never actually ordered anything from New England Chimney Supply. Why did I pay that? Well, you're not going to get that money back. You can't go back to that. But if you have coverage, you can. System failure, malicious or not, whether you have somebody phishing and they lock you up, or It's kind of like ransomware, but when they get in there and they start messing around with stuff, it's like when you're looking at bad sites or you go on the dark web, it can lock your computer up. Now, everybody's computer has already been hacked. Somebody is in your computer now. You may have ransomware or the antivirus on your computer that keeps it from happening, but everybody's computer has been hacked. Your phones have been hacked. Everything has been hacked already. Everybody knows all your passwords already. That's why they ask you to change your passwords. What they do is they'll sit on it and they'll monitor everything that you're doing until they see an opportunity. One of the examples we had in one of the cyber classes, this lady, when they did the forensics look, her account had been hacked 5 years ago, and they had all of her passwords, all of her bank account information. They had everything. They never did anything with it. Well, she went to purchase a house, and when she went to wire the down payment for the house that day at the closing, the email came across that said, "Hey, here's the wiring instructions." She wired it. It was to the person that hacked her computer, and she couldn't get that money back.
Oh my God.
That's how it happens. Like they're already in here. They already know everything. There's nothing you can do about it. The only thing you can do is be vigilant and make sure that you're paying attention, crossing your I's, dotting your T's, or crossing your T's, dotting your I's. We're in insurance. We had it happen to us. One of our was our head of accounting about 7 years ago. She went to send a wire transfer, and luckily she stopped it before it went through because our location in Knoxville that she was going to send it to, the manager was there, and he goes, "We don't need that. We don't have that company." So we were able to stop it. But again, they're already in there. You know everything. You just got to be careful. So a lot of people, when I tell them this, like, "Hey, you need cyber liability," or data breach is also another thing name for it. They say, "My business is small and we don't have a lot of data." It doesn't matter if you have any data or not any data, but a lot of data. If you have any, you could be held liable, and it could be, very damaging to you, your business, and your customers. The other excuse is, "I don't store data. It's outsourced to a third party." It's not about who holds the data. It's about who owns the data and who that data comes from, and that's you and the business owner. So if you're collecting that data and it comes from you, you own that data, and it doesn't matter if it's a third party, you are responsible for it. And the last one is, "I don't hold or process credit cards. My credit card processor takes all that information, and we don't hold anything." Again, it goes back to owning the data. It doesn't matter if you don't hold it or you don't process it yourself. You own it. You're the responsible party. You're the reason that it got compromised and hacked in the first place. So huge thing. Hope no one's ever affected by it.
Well, let me ask you, what kind of money are we talking about to have a policy? Is there a certain size? If you're a $1 million company, you're probably looking at $1,000, or is there a general number that we're talking about that people could understand if it's a $100 thing or it's a $10,000 expense? Like, is there some kind of a baseline?
It's usually about a $1,250 to $1,500, maybe $1,000 to $1,500 minimum premium for $1 million. You could get watered down coverage for $100,000, $250,000, and that could be okay to have, and that runs usually $500. So it's not unaffordable. Is it necessary? Yes. But if you get it on the front end, you can get it a lot less expensive than what it's going to be here in the near future.
So what does it cover? Okay, so I have a data breach or I get locked up. Does it pay the ransomware? Does it pay the people who hold me ransom? Does it pay? Obviously, you said it sends out the insurance could cover, if I have a data breach and I have to notify with the Safe Harbor Act. But what does the coverage cover?
It could cover the ransom. A lot of times, you notify your carrier of it. They're on it. They have people. Again, it's not like you have to have an adjuster come out and it's going to take them 24 hours to get there. They got to climb on the roof, write up a report. No, they go straight into your computer and they start working. It could cover the ransom. A lot of times they could undo the problem, if that makes sense. It could cover notification fees. Like I said, if you got to notify your customer base, it could pay the notification. It could pay any kind of damages that are caused. It pays for the forensic investigation of your computer. It pays to restore files. It pays for if you have damaged devices. It could have some, again, if you have there's like a third party coverage that could cover if you get hacked and you, let's say, this is very far out there, but you go and start trashing Ashbusters or SureFire, and it's just because your computer's been hacked, it's not you, but somebody else. They have libel and slander coverage on there, so it covers a lot of things. There's some cool. I say cool. They're not cool. It's boring, but there's some good coverages out there that could protect your business and help you from being caught with your pants down for sure.
Good information. Sorry, I had my mic muted. All right.
Did I cut off? What's going on here, Mark?
No. There's a little feedback happens on my mic when you're talking, so I have to mute myself. But all right, great. Cyber liability. We're about 45 minutes in, and so we got about 15 more minutes, but we can go over if we need to. So keep going. Good information. It's tough to stay excited about insurance. You do a great job of keeping it interesting, but it's just what it is. It's something that we all have to have.
Yeah, I got a new sales guy we hired. And I told him, I said, he was kind of asking for some tricks of the trade. And I said, hey, look, insurance sucks. Nobody likes to talk about it. When you go in, part of our guys, the worst part, or any sales, the worst thing you can do is go in and start spewing whatever you're selling on the people. You got to break their barrier down. I was like, well, if you start talking about insurance, they're going to point at the door and tell you to get out. You got to make them comfortable, bring their guard down. So, yeah. I get it. I gotta train people on how to sell how to sell insurance and make it exciting, and it's never exciting.
Well, selling chimney repairs isn't exciting either. Nobody has a chimney budget. Nobody's like, oh yeah, I've been waiting. I've been budgeting for all these chimney repairs. They don't want to hear what we have to say necessarily. So in the chimney side, we understand we're in the bad news business. You're kind of in the bad news business too. You're like, hey, by the way, this is going to cost X and it covers this if this ever happens. And then everybody has to make their own decisions. Well, do I think that's going to happen or not? And it's almost like, we talk about safety. You never know when you're going to fall. You can't predict when the fall is coming. Like, oh, okay, now I need to put my safety gear on. You just need your safety gear. You can't ever say now is the time I need the coverage. You don't know when cyber is going to happen. You don't know when your guys are going to have an accident or your property is going to get struck by a tornado. But these are the things that help you sleep at night. These are the things that you build into your business. If you run a good business, you're covered. You can go to sleep and you can understand that you've got a relatively good system of backup so that your business and your livelihood and your home is covered. So keep going, brother. Keep going.
So the last I'm going to talk about is an excess. So, Mark, you have an umbrella. You have a true umbrella policy. And what that is you get it from the same carrier that you have all of your other coverage from, minus your work comp. But that umbrella is going to go over your auto, your general liability, and your workers' comp to give you an additional $1 million, $2 million, $3 million of liability. An excess is something that you have to go get from a second or a different company. A lot of times you got to go through a broker to get it. So it will be $1 million policy. Sometimes it only goes over the auto. Sometimes it only goes over the general liability, and you have to get separate excess limits to go over your auto, your general liability, or your work comp. So your umbrella doesn't automatically cover all of those things. Usually you have to, your company, if you're going to have an excess or an umbrella to cover over the other coverages that you have, they have to be A-rated. They have to have a certain amount of surplus in their assets. So like they have to manage, $4 billion or something like that. So there's a lot of things that go into it. But I learned about this probably about 3 or 4 months ago, but I started having a really tough time getting higher limits because I do a lot of heavy construction in Nashville, commercial construction, and also transportation. And it was tough for me to get the excess liability that these carriers needed for people to work for companies like Skanska or larger general contractors. And I was really wondering why that happened. One of the main reasons, I won't say main, but one of the reasons that this is happening is, I don't know if y'all remember the Mandalay Bay shooting in Las Vegas during that country music festival. Mandalay Bay agreed to pay out over $800 million to the victims of that shooting. So what that means is you have $1 million, $2 million general liability policy, Mark. They had 800, almost close to $1 billion that all of a sudden just went away. That all these reinsurers are. So what happens on an umbrella or an excess is somebody will take the first 20 million, somebody else will take the next 5 million, somebody next will take the next 50 million, and those limits are divvied up between the reinsurers, and they get a percentage of the premium paid in.
Oh, wow.
So imagine being on the last, let's call it $50 million of that umbrella, and never thinking that they were going to have to use it and then having to pay that out. Everybody got hit with it. So that has a lot to do with the hardening of the excess umbrella liability. The limits are just getting tougher. I haven't seen a lot of people, based on the exposure that they have, how far they're traveling, what their receipts are, what their payroll is. They take all that into consideration when letting you know if you can get a higher umbrella. A lot of my Chimney clients that I have, we can't get higher than a $1 to $2 million umbrella.
When would you need excess? When you're doing a really, really big job and they request it? And then what happens if you're requested to get it and you can't get it?
Well, you can get it. Now, we'd have to go to a broker a lot of times. I've never been asked for loss runs for getting an excess policy. I'm trying to write it's a medical equipment repair and sales here in the Nashville area. And I'm trying to get it to go over their autos. They're asking for loss runs. I've never had to provide loss runs for an excess or an umbrella policy. It's like it's something brand new that I just had to face for the first time. I've been doing this for just about 8 years now, and that's the first time that's ever happened to me. But you can get it. They're just going to make you pay. And they can make you pay whatever. So this guy that I'm dealing with, he says, yeah, I want $1 million. And they said, well, before we underwrite it, if he doesn't have loss runs, tell him it's going to be $10,000 and see what he says.
Well, let me ask you, so that's happened to me before, where I did a proposal, I did an estimate, put it out there, and then the contract comes back to me that I got to provide a bunch more insurance than I have. And so then, and I've called you about it before, and I'm like, how much is this going to be? And you're like, oh, it's going to be an extra, $1,000 for this one job. There's been times that I have gone back and I said, hey, what you asked for on the contract is going to cost you another $1,000 for the provide it. And then sometimes, actually more times than not, that lately they've been saying, well, we'll just strike through that and we'll just use your regular coverage.
Yeah, the people that you usually deal with, they're button pushers. They're dealing with lawyers and their insurance agents. So for every company you deal with, there's somebody like me on the other side, or there's somebody like your lawyer on the other side, advising them on what they need to do to protect themselves. And It all, again, goes back to being honest with yourself and really seeing how bad do you need it, or is this worth it? So when you're looking at that and you go back and you have a conversation with whoever you're doing business with, a lot of times they'll take into consideration your situation, and you can negotiate on maybe a lower limit, or just, like you said, operating with what you currently have.
Yeah, I think some of those things are movable. Like you said, the guys are getting advised, or the contractors are getting advised. You want this, you want that. By the way, what you're showing is like a black screen. It's not showing your actual PowerPoint. Are you finished with it?
Hey, that was the end of my insurance presentation.
Okay. So can you see yourself now?
Can.
Okay. So yeah, I mean, so some of those walls are a little bit flexible, for us contractors to say, hey, I'm not going to cover that, or if you want me to have that, it's X amount dollars more. But well, dude, we've got about 4 more minutes. Anything else that you think would be good information for our listeners or watchers?
One thing that we run into every day is the work comp. Like people say, hey, my work comp's so expensive. I got hit with a huge audit. Well, they just don't know how to deal with it. You have to take into, and it goes back to the first question, the janitorial, not knowing how to insure people. The 2 class codes you need as a chimney sweep for work comp, guaranteed have to have are 9014 and 9170. 9014 is ground level, 9170 is above ground.
So let's talk about that for a second, because you found that in my policy, and you said, hey, if we can split up, he goes, you said, how often are you not going on the roof? And there was a percentage that we worked out that we weren't going on the roof. And so then it's cheaper for that insurance if you're on the ground. How do people need to track that?
The best ways to do it are to really have if you could split your techs up, the techs that go on the roof and the techs that don't. Again, there's other ways like drones. A lot of people use drones or GoPros on a stick or a pole. They don't have to get off the ground. So there's ways that they could do that, but if it's absolutely necessary, you have to track it in your your payroll. So when you go into your QuickBooks, it has to show on the pay stub for the employee. When you run the reports to give the auditor, it has to show we paid him X amount for 9170. We paid X amount for 9014. We paid X amount for 5551, which is your masonry at heights. And then when you get audited, you're just honest with the auditor and you say, well, this is the time that he spends. This is what we paid him for his above ground work. All the rest of the time he was on the ground level.
So what happens, a switch of subjects here before we have, what happens when you get a big fat audit and you owe a bunch of money? Like what? I know you got to pay it pretty much. Is there any fighting it? And then how do you avoid it in the future? Because we're all of our businesses, we're estimating low on how much growth we're going to have. Almost every chimney company is growing more than they thought. And if I talk to you, I know for a fact, Cam, when we project what I'm going to go to, I'm almost always over it. And this year is no exception. We're way up over where we were last year and where we even projected ourselves. So what's the best way to handle that?
Again, one of the things is being honest with yourself. You're kind of in the catbird seat of chimney companies because you're offered monthly self-reporting. So you're actually reporting real numbers. You never get yourself in that bind. For other chimney companies, best thing to do is set a reminder, whether it's your wife, your bookkeeper, your secretary, whoever it is, set a reminder every quarter to review your payroll and see where you are and communicate that with your insurance agent. Give your insurance agent a lot of times it's not your agent, it's your customer service rep or account executive that you call and say, hey, what is my policy exposure? And you'll take a look at it and you'll see, okay, well, I have $100,000 of payroll year to date, and I'm only rated for $125,000, and we're only 4 months into the year.
Right.
You're going to be behind the 8 ball when the audit comes. So you got to do something about it now.
Right. Basically, the audit is, you told them an estimate. They gave you a price for your insurance based on that estimate. And when the estimate is wrong, what you gave them, they have to get more money because they have more exposure.
But it's my fault. It's always my fault.
So it's always Cam's fault. It's your fault that the company grew more than they told you they would.
Yeah. Hey, look, I had it this year. I had to pay more in taxes this year than I ever have.
Yeah.
And my accountant, he was like, hey, it's a good problem to have. And I was like, it's the same with work comp. If you're paying them more in work comp, it's a good problem to have. That means you paid your employees either more or they did a better job for you, or you did better if they did better. I don't know one person who's paying more in payroll and they say they've lost money.
Yeah. Well, they can lose money, but the company generated more money. And what you did with what was extra is kind of your fault. And that's why when this audit comes along and you already spent the profits out of it and you weren't ready for it, that's a mismanagement of things. But I think the one thing that we went to was that self-reporting every month. The payroll is accurate, so therefore my insurance is closer. We can have 1 month that's different, but we're keeping up with it. And since we've done that, we haven't had this big audit, because I think 2 years in a row, and most of it was before you started working with us, we got some really big audit numbers, and I had to cut some pretty big checks, or we're going to lose. You lose your insurance, and you can't get other insurance with somebody else until you pay for it.
Oh, yeah, that's I have people all the time that try to dissolve companies because their experience mod's too high, and they owe an audit and they try to dissolve the company. Insurance is almost as bad as the government. You can never get around it. They'll always find you. It doesn't matter if you're putting in your wife's name, your aunt's name, or your cousin's name. They're going to find the tie to you, and they're going to ask your insurance agent and say, so what's this relation to Mark Stoner on this new business?
Right.
I'm going to let him explain that to you.
Yeah. And or they find it out later. You start it, and then it still comes and hunts you down.
That's right.
Well, great, man. I certainly appreciate your time. I put your contact information here at the bottom. See Arnold at southpointrisk.com. I know you can't work with everybody, but you certainly have a lot of information, and you've helped a lot of people, and I appreciate you being part of our industry. What's the perfect client for you? Before we cut out of here, what kind of clients help you?
Really big ones. I don't do a lot of active producing anymore. I'm fortunate enough to be very selective because I have to be. I got a team of 6 guys under me.
Right.
And usually what I do, if somebody contacts me now, I'll field the opening questions and then turn it over to them and let them take care of it. I walk them through the process. It's a learning process for them, but I also oversee it and make sure that you're taken care of. It's just like I'm doing it, but you're not talking to me every time.
Yeah, and that's understandable.
But the ideal, I guess, client for us is somebody that knows that our insurance is going to, if you want to be covered, and people always contact me and say, I want to be covered right. And then we do a month worth of work and give them a $10,000 price tag. And they're like, oh, this is ridiculous. And it's like, I told you on the front end. So usually we're about to be covered right about $10,000 for a $250,000 to $500,000 in revenue company.
Interesting. That's a good number to know to be covered properly, because we all know in the chimney business, there's always a cheaper way to fix a chimney. There's a cheaper way to do everything there is, but you are allowed to, especially in this kind of thing, you get what you pay for. In this case, you get what you're covered for. And I can't tell you, when I've bought cheap insurance before. I bought it online. I bought it, I tried to do it, on the internet or whatever. And it was fine until I got hit and I had no coverage. That umbrella thing really hurt me one time when they stole stuff out of a trailer and I didn't have coverage between the trailer and my office. Like stuff that was movable, I believe it's called inland marine, but there, and also, like, you didn't talk about this much, but soot and pollution damage. Or is that the right term for it for chimney guys?
It's pollution and professional.
Okay.
So a lot of people don't even think about when you're tuck pointing and you're grinding out the existing mortar joints, that dust that you're generating is called silica. And I guarantee you, if every single person that watches this or is watching or that you talk to, if you tell them to go open their policy, one of the first exclusions they'll see is a silica exclusion. And then there will be an absolute pollution exclusion, and then there will be a professional exclusion. So that's why, that's part of the reason why we're a little more expensive, is because we tell people they need a professional and pollution policy to cover your professional opinion when you're inspecting chimneys, but also cover your faulty workmanship.
Right. Very interesting, man. I know insurance is boring. You make it as exciting as possible. I love for you to tell stories. We might have to have you back, and we'll just go through a war stories episode of what not to do. And I've got plenty of those. You and I have a super funny story about a wreck that we didn't get into tonight, and maybe we'll have to do it another time. But I certainly appreciate your time, Cam.
Absolutely. Thank you for having me.
All right, buddy. Thank you. Have a good night.
See you, man. You too.
All right, guys. I hope you enjoyed that with Cam. He's just a blessing for our industry. He has helped a lot of people, and to get good coverage and to have your company truly covered, it's not a cheap thing, and you can imagine why. I mean, I found that the most of the time the insurance is cheap is because they're not asking me enough questions, and they don't know my industry enough. The more they know about it, and the more experience they have in it, unfortunately, the more expensive my policy is, but the more coverage I have for it. So, all right, guys, that's our night. That's SureFire Live. I hope to get out of Facebook jail pretty soon. We'll be back. I'm calling it Facebook Live. It's YouTube Live right now. Thank you guys for joining us, and we'll talk to you next week.